सबकी भलाई।
First take on the index, the Nifty is up 75 points.
The Nifty is now inching once again towards the 17,600 marks.
Looking at the markets, which have seen a sharp recovery from the lows, mid-cap index is up 430 points.
Choppy, but not bad, right? By the end of it, we're flat on the benchmark indices. There's so much action happening in the mid-cap space. The mid-cap index is up 1.3%.
We're going to end higher, 27 points, 28 points on the Nifty, which is not bad with the absolute sideways, disinterested kind of trading action we've had, at least on the index. It's really not been about the index, but 17,673, so a little higher as compared to yesterday's close.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track the 6 hours of the day's trading action in just 5 top headlines. I'm Nigel D'Souza. Let's get straight to the headlines for the day. Investors tread with caution on the Lal Street ahead of the budget. The Nifty and the Sensex end with marginal gains. The mid-caps and the banks outperform. Institutional investors and high-net-worth individuals rescued the 20,000 crore Adani FPO on the last day. The issue is fully subscribed, even though the retail book gets over 10% bids. Most group stocks continue their downward trajectory. However, Adani Enterprises, ACC and Ambuja Cements buck the trend. UPL posts a strong quarter, beating poll estimates on all fronts, while a weak, tepid performance and an unaspiring outlook pushes Tech Mahindra lower by 2%. IOC also posts a weak quarter, missing estimates on the profit and the EBITDA front. Anticipation of further Fed rate hikes as well as a strengthening USD puts pressure on commodity prices. Metal prices soften, crude prices falls as continued Russian crude flows and the outcome of the upcoming OPEC Plus meet. Godrej Consumer and Westlife Foods gain on the back of a strong showing in the third quarter. Sun Pharma reports an inline set of numbers. However, the stock ends with a cut of around 2%. Also, how did the markets fare ahead of the union budget? Well, Prashant Nair is standing by with the wrap of the day's trading action. Prashant?
An okayish kind of session. I mean, after the last few days where the markets have been all over the place and under severe pressure, a 20-30 point kind of stable close, I think, would be taken with both hands. Banks did better, and I'll come to this a little later, but this was to be expected because that is the area which has seen the maximum collateral damage. The Bank Nifty had lost about 6%, 6.5% over the last 3 days, and it came back about 1% or so by close. Gains today coming through in banks. SBI doing well. Mahindra and Mahindra, Ultratech for the second straight session doing well. BPCL, ITC, Power Grid were some of the other names. IT stocks, by and large, under pressure. The index not doing well. The Adani FPO got done finally, and I think this is a big one. The stocks, 6 odd stocks from the group come up on your screen, doing much better as compared to the price damage we've seen there over the last many sessions. Adani Total, perhaps the only one which still is under a fair bit of selling pressure. In the broader market, advances far outnumbered declines. Public sector banks did well. You had defense names like BEL, Data Patterns, Mazgaon, etc., which did well. KPIT Tech, Apar Industries, Kalyan Jewelers, some of the others, and this entire chemicals and fertilizer space, Chambal Fertilizer, Deepak, etc., doing and seeing a fair bit of traction as well. Buoyant market, and I think the broader participation, I think, is what gives hope that maybe there is more to come and some stability is to be expected. But you got 2 big events. There is the union budget, and I think the market will bide their time to see what is in that document to really get excited about anything. So I think that's very, very important. And then later, tomorrow evening, we've got the Fed decision, to which I think we'll only react Thursday morning. So it's pretty important next 2 sessions for the markets from here. Back to you.
Thanks a lot for that, Prashant. Well, in market opinion, Dheeraj Agarwal of Ambit Capital believes that many fault lines have appeared in the market this year, adds that banking sector is expected to experience some margin compression going forward. Let's listen in to what he had to tell us.
There are lots of fault lines appearing in the market this year, and if at all we do reach a fair value, it's going to be a rocky path with lots of choppy up and down movements. Or it's quite possible that we may actually miss it as well, although that's a theoretical fair value basis EY/BY model, because a number of fault lines are appearing. So my preferred market bias at this point of time is we continue to chop in a broadly 10% range, 10-12% range without going anywhere this year as well. So quite similar to what we saw last year. We chopped up and down 2 or 3 times, ending the year with just 4% gain. I'll be surprised. I'll be surprised if I see more than a 4 or 5% net move in the market on either side come December. Banking should see some margin pressure going forward because credit growth has been running like mid-teens, 15, 16, 17%, but deposit growth only 8 to 10%. And the surplus liquidity which the banking system had been almost completely utilized. So at this point, there is no option but to chase deposits a little bit, which will result in some impact on the margin. Banking stocks might have fallen for a different reason at this point, but at least after this fall, hopefully this little bit of NIM pressure with that we'll see may not really impact the stock prices too much of the downside. So they are certainly buy the dips, but the kind of returns that we saw in banking space last year, don't expect that to be repeated this year.
Well, moving on to the second headline now. Institutional investors and high net worth individuals rescued the 20,000 crore rupee Adani follow-on public offer on the last day. The issue is fully subscribed, even though retail book gets just over 10% of the bids. Yash is standing by to fill us in with more details on that front. Yash?
Well, Nigel, as was indicated by the management as well, and was the popular understanding in the market that the FPO for Adani Enterprise will sail through, riding mostly on institutions, and that's what really played out today. Just before market closing, just about 20 minutes before, the issue was fully subscribed. The numbers that we have till 4:20 p.m. today, they indicate that the issue has been subscribed 1.12 times, with the QIB book getting subscribed 1.26 times. Under the QIB book, about 1.28 crore shares were offered. The demand has come for 1.6 crore shares. HNI book also saw a strong response, 3.32 times subscribed. Bids about 10 lakh saw oversubscription of 5 times. The retail book was very weak, and this was the indication from the market. It got subscribed about 12%, employees 54%. Some interesting facts about the subscription: nearly 85% of the QIB demand has come from FIIs. Almost entire HNI demand came from large HNIs, which is essentially the bid over 10 lakh rupees. Now, of course, there were 2 conditions for this FPO to go through. One was 100% subscription of the QIB book and 90% subscription of the total aggregate book. Both of those conditions have been met. The FPO for Adani Enterprise sails through as far as the last day is concerned.
Okay, all right, Yash, Shabir, on top of that, thanks so much for stopping by and filling us in with those details. Moving to the third headline now. UPL posted a rather strong set of numbers. They beat the poll estimates on all fronts. The stock ended with a mild gain in trade. Sonal is standing by to run us through a quick analysis. Sonal, they're reiterating their guidance on the revenue.
Oh yes, they are, and that's a positive because the company did speak about channel inventory destocking as well, and they say despite that they expect that revenue growth that they had guided for earlier, they had guided for a revenue growth of around 12 to 15%, EBITDA guidance of around 15 to 18%, and also their debt reduction guidance. Earlier they had guided for $650 million in terms of net debt reduction, and they continue to hold on to their guidance as well. This time around, revenues are up 21% at 13,679 crore rupees, which is slightly better than what the street was working with. Even in terms of EBITDA as well, the company has done better. But if we talk about the margins at 21.1%, this compares with a poll of 21.9%. Profits too for company this time around have looked good. Now, if we talk about the geographical breakup as well, this time around the company has done well across all the geographies barring Europe, and that continues to be a pain point for the company, and they did say that that is something that will continue as well. So Latin America has grown by 28%. That continues to be the big growth market for the company. North America has grown by 30%. India also as a market is up 19%, and rest of the world is up 12%. While India this time around, because of the erratic weather, was expected to be on the lower side, but that hasn't happened. And across the board, barring Europe, the company has done well, and also maintaining that guidance in a challenging environment. And also at the time when other agrochemical companies have not reported good numbers, this comes as a surprise. And also reasonable valuations are lowest in the agrochemical space, around 12 times one-year forward earnings. All this bodes well for the company, and that's why the stock is higher in trade as well.
Got that, Sonal. So UPL was good, but Sonal, it was a weak showing, right, from IOC with India's largest state-run oil refiners' profit as well as EBITDA missed estimates. The revenue, though, exceeded expectations. Run us through those numbers.
Well, IOC reported what was a weak set compared to the estimates. Yes, it's an improvement on a quarter-on-quarter basis, but much lower than what the street was working with. And this after BPCL reported strong set of numbers as well. The petchem segment losses widened there. Shutdowns at their Panipat refinery led to loss of volumes in the refinery segment as well. So overall, revenues down 1.4%. EBITDA was up 83%, but lower than estimates. Margins at 1.8% versus 1%, but versus estimates of around 3.8%. Company reported a profit of 450 crore rupees this time around. The reported GRMs, they came in at $12.7 per barrel versus an estimate of $15 per barrel. Refinery throughput increased on a quarter-on-quarter basis. Marketing sales also were higher in the domestic market as well. But the petchem loss that widened this time came in at 613 crore rupees versus 129 crore rupees on a quarter-on-quarter basis. Now remember, BPCL management had highlighted in their earnings call that the shutdown of IOCL's Panipat refinery is something that helped BPCL offtake higher volumes in third quarter, with a few bulk customers also shifting to retail. So that is something which might have impacted the earnings this time around. In terms of valuations, IOC trades at around 7 times compared to BPCL, which trades at 8 times, and HPCL, which trades at 5.5 times.
Thanks a lot for that, Sonal. For the time being, though, we'll slip into a short break, but we'll be back in a jiffy with the remaining headlines that we're tracking for you.